So after doing YouTube for all these years, I am so excited even today to get questions and comments. So I'm going to actually go through some of these today and read them off and expand a little bit because while we do comment and respond, there's nothing like a live response to really kind of complete the thought. So here it goes. On our how to get a 4% mortgage rate, here was the question, and some of these aren't questions, some of these are just comments or statements. So here goes. If rates remain high, rather than refinance, you should have mentioned a recast for the loan. No money out of pocket if you do that, and your payment gets reduced by the leftover escrow money. Okay, there's some things going on here. First, it is important to know that in most situations, when you're going to refinance your loan, which essentially means that you're going to take your current balance owed and you're going to refinance that balance, assuming that it's not a cash out refinance. That's a different type of refinance. But in this case, let's say you owe $200,000 and you're going to want to refinance that $200,000 and your goal is to either drop the interest rate or change the amortization term on your loan. A refinance will allow you to do that, and if there are costs on the refinance, in most cases, assuming you do not exceed the maximum loan to value ratios on that particular home loan guideline, then you can finance those costs into the refinance. So in that situation, there technically is a no out-of-pocket cost option on the refinance. Now, if we move over into the recast, which I love recasts, and I'm so glad that this person brought it up, a recast acts and works a little bit different. So on a recast, it's, let's say you do have that same $200,000 loan, and let's say that you have a inheritance that comes through and it's $50,000 and you want to take that $50,000 and you don't necessarily want to refinance, meaning that you're not dropping your rate, you're not changing the term, you just want to drop your principal balance. This is where a recast comes into play. It can be very helpful. Essentially, the lender usually will charge anywhere from, let's say, $100 to $300. They're going to have specific terms about what the minimum amount of the principal reduction needs to be. In our case, that's $10,000. And in that scenario, you could take that full $50,000 in this example, apply it towards your principal balance, dropping it from $200,000 down to $150,000, and then your payment is re-amortized based on that new principal balance. So it's also a great strategy for dropping your payment in lieu of refinancing without having to go through the whole refinance process or incur costs outside of whatever that flat fee that many loan servicers have. Hopefully that helps. All right, that was a good one. Thank you so much for commenting. And you guys, as I respond or you see my other videos, please just comment and give me your thoughts or ask the questions, because honestly, if you're thinking about it, many people might also be thinking about it. And the whole goal of this YouTube channel is just to bring education about the home loan process to the masses. So that's why it's here. Please use it. All right, the next one. All lenders offer the same interest rate. They only differ in closing costs. This is somewhat true. So if you just think about how interest rates work, if you started at, let's say, a 7% interest rates, generally from a home lending standpoint, you're going to see interest rates move in eighths, meaning 0.125%. So it might be 7%, 6.875%, 6.75%, 6.625%, all the way down to the next threshold of 6%, and then it will continue to follow. Now, for every single one of those rates, there's an associated cost or no cost, or potentially even a credit based on that interest rate. So this person is correct in the sense that if you just had a schedule of possible interest rates, it truly is the cost associated with that rate, not just from discount points or no discount points or a lender credit, but it also could come down to the lender's particular cost overall. So most lenders charge some type of processing fee, maybe an application fee, an underwriting fee. Those are other costs that lenders generally will pass through on a home loan because those are costs that they're charging, and those could vary lender to lender. All right, Gen Z housing market. This was my video. And when will they buy? This was the whole topic of this video. How are Gen Z supposed to buy a home when the majority of us make around $31,000 to $38,000 a year? The problem is you people only market yourselves to the top 20% of earners in my generation and completely ignore the needs of others. This is a complicated response because from a lending standpoint, from a professional in the mortgage industry space, part of the challenge is the rising cost of houses. So that is impacting many people depending on their income brackets from being able to afford to buy a house. I totally get it. I do want to express that there are a lot of loan program options out there, depending on the community across the country, that do focus on low to moderate income earners, because it is important that all people have the ability to purchase a home if they want to purchase a home. And there are some special programs out there that can help with down payment assistance, that help with reduced interest rates, that help with reduced mortgage insurance costs for certain income brackets. So if you're interested in learning more, please reach out to us and we can let you know what's available maybe in the community that you're looking to purchase a home in. All right, this next one's funny. I just had to say it because, you're going to see why. I like how the boomer is talking about how Gen Z will behave. LOL, look what you did with the economy. Amazing. Okay, first of all, I am not a boomer, but obviously it tells me I need to do a little touch up here because you're thinking I am. I'm not. Secondly, I think this is a loaded statement. And I would say that the responsibility comes down to each and every one of us, and it doesn't really depend on our particular age or where we are in that whole cycle. I think what is important is that we're all really leaning into and kind of understanding global economics and how money works in our country. And we're voting, with our voice, and we're getting educated prior to voting and putting people into Congress and into, executive roles where we understand just really what is the initiative, what is the plan, and what is the impact. And I know that this is a deep conversation, but I did want to say, one, I'm not a boomer, and two, it is never any one person's responsibility or one age demographic responsibility. We all have a responsibility and continue to have that responsibility as long as we're here on this earth and in this country and able to vote. All right. New FHA up to 100% financing, no down payment program. Okay, this was a hot video and lots of interest in it. Thanks for this information. Glad to know we still haven't learned our lesson from 2008. This is really a good comment because I do think that there could be more clarity around kind of what happened back in that 2004 to 2008 timeframe that led to the Great Recession versus the down payment assistance programs that we see today. First and foremost, know that the lending guidelines back in that time, because yes, I was lending back in that time, so I understood them well, they were completely different. They did not have the guardrails that exist today. It was really, from an income documentation standpoint, it was almost as if anything went. There was a loan program that didn't have to include income. There was zero down payment loans where you didn't have to verify income. So it led naturally to people getting into homes that they couldn't ultimately afford. And that's just essentially, what happened back then. Let's fast forward to now. When we talk about down payment assistance programs, whether it's this FHA 100% down payment program or whether it's any other down payment assistance program, know first and foremost that there are lending guidelines that have very clear credit requirements, debt to income requirements, etc. So I think on some level, the mortgage industry has learned that, and they're trying to still bring options to people who need down payment assistance, if that's the one thing that can help them get into home ownership when everything else checks the boxes. Can they afford the payment, though, is the big focus today in all home loan programs, not withstanding down payment assistance for sure. So again, these programs exist, but it is different in the sense that, the lending guidelines are much more strict. And let's face it, with Dodd-Frank Act and TRID, all of the other federal regulations that came about because of the Great Recession, it is just generally a completely different lending environment today than it was pre-2008. All right, number 2, the way you explain this is brilliant and clear. Thank you so much. Sometimes this stuff is not easy to communicate. Sometimes I'm like, was that clear? So thank you for that comment. I appreciate it. No money down equals fat monthly payments. The result is either working 2 jobs or a probable loss of the house. This is real. And there's some truth to this. Yes, because anytime, whether it's with a down payment assistance program or not putting any money down or putting minimal down, the key is, can you afford the payment? And only you can truly decide that. I've said it for years. When you go through the home loan pre-approval process and your lender reviews all of your documentation, your income documentation, your asset documentation, they may give you a number that you can qualify for, but that may not be what you're comfortable with. So knowing your own boundaries and knowing your spending habits and feeling confident every day that whatever house price point you're purchasing, whatever loan amount that you're financing, whatever that results in a payment that you feel good about, that's the key. Don't ever let a lender talk you into something that you're not comfortable with, because that's where, in fact, trouble begins. And the probable loss of a house or having to work multiple jobs just to pay that mortgage payment, nobody wants that. So I think that was really an important comment. Thanks for sharing. All right, thank you for this information on the FHA alone. And I see this being a huge disaster for most Americans because most do not have any money and do not know how to maintain things. Again, this goes back to budget, yes. And whether it's the FHA down payment assistance program or any other home loan program, knowing your monthly budget, knowing your spending habits, doing an actual budget, because this is important. From a home lending standpoint, keep in mind that lenders are using gross income to qualify you. They're not using net income, and that's how the lending guidelines are written. So from a gross income standpoint, we all know that's not what we bring home. That's not the amount that hits our checking account. This is why I'm so passionate about making sure that no matter what the lender tells you can qualify for, you feel you've reviewed your budget, you are confident that you can write that check every month. And also keep in mind that let's say you close on a house today and you've got your principal and interest payment, which is the home loan payment. You've got property taxes that may be included in your total payment. You have homeowner's insurance included in that total payment, and potentially mortgage insurance if you're putting less than 20% down in that total loan payment. Keep in mind that that payment today, it could go up in future months or years based on property taxes and the cost of homeowner's insurance. So even though that you're comfortable today with that payment, you kind of want to know, gosh, could I afford another $100 a month or $50 a month or whatever that might be as property taxes and homeowners increase. And homeowners insurance is what I'm talking about here. Homeowners insurance has increased dramatically over the last couple of years. So depending on where you are in the country, this could really be something to consider. All right. Does this mean if you were stuck in a minimum wage job and struggling to save, you can be a homeowner? I assume the income limit was for people who are really, really poor. Like, sorry, unless you win the lottery, this won't ever happen to you. This program in particular does not have income limits on it, but there are some down payment assistance programs that do have income limits on it. Keep in mind, it's not necessarily the income limit, it's the amount you make versus what your debt load is. The debt is the key here, because let's say that you gross $4,000 a month and you have zero debt. You may be able to qualify for an $1,800 house payment. But if you have an earnings of $4,000 gross per month and you have $1,000 house or car payment or car payment together with credit card payments, it definitely is going to impact the price point of the house and the home loan that you can afford. So, I think that It's not really about the, stuck in the minimum wage. I get it. And that could be difficult. Again, going back to the cost of housing. The cost of housing has increased over the last, it's increased over the last 30 years, but it continues to increase. And in part, it's because of supply and demand. There are more people out there that want to own homes than there are homes really available in our country. Now, one topic here is if you are interested in purchasing a home right now, and if you have new home communities in the area that you might be interested in purchasing, I would say check them out. And here's why. Right now, we are seeing a trend with the big home builders across the country. They are paying substantial dollars to bring interest rates really, really low down to be able to help people buy their homes. Now, unfortunately, many times that isn't tied with a down payment assistance program across the board, but I've seen a few out there that also tie these very low rates with down payment assistance programs. So be sure to talk to your local real estate agent. Be sure to, you can always ask us. We have partnerships with builders across the country, but depending on the part of the country you're wanting to purchase in, there's some really cool deals out right there right now that could help you buy a house. Realize too, that this is a point in time. This is always going to be the way it is going to be. So I would take advantage of it if you're in the position to be able to buy a home today. How to use an FHA loan to buy an investment property. If I recently purchased a house under a conventional loan and my wife is the co-borrower, not a co-signer, can she still apply for an FHA loan for a quadruplex? We plan to have her live there for a year, then we'll rent it out with the other 3. Well, here's the deal. From an FHA loan qualifier standpoint, they're going to be very concerned about the true intent. It would have to be a really clear, understandable story for the loan underwriter, which is the person in the home loan process that approves the loan, to approve a married couple living separately in a fourplex. When you purchase a home using an FHA loan, your deed says that it is your intent to live in that house and occupy that as your primary residence for 12 months. So even though this video was built around how to do that and still be able to build wealth through investing, it was only intended to show that that works if you yourself are going to live in the property. So if you're buying a duplex or a triplex or a fourplex and you're going to reside in one of those units and then rent out the other units, that is how you could do that and still have the income on some of those units offset your monthly payment, which is really cool. If you have any other questions or comments, please don't hesitate to just drop them below. We're going to do more of this thing. We get a lot of requests for this type of video feedback. We'll talk to you soon.